secret to trading and becoming profitable is not being wrong less than you are right. Everyone gets it twisted and thinks that you need to be right 60, 70, 80% of the time. That's great if you're selling courses, but the ultimate goal in the market is to make money. This is why creating a profitable system should be your primary focus as a trader. But unfortunately, many people struggle with selling at the right time, leaving their profits on the table too long, or even not setting a stop loss and leading their portfolio to catastrophic losses. As somebody who has coached over 2,000 students, I know that most people fail in the market due to one thing, and it is their inability to control their impulses. They force mediocre trades, hesitate on their entries and exits. They end up holding on to losers much longer than they should. They move stop losses too soon, or somewhere they shouldn't have moved a stop loss at all. Or even worse, they blindly follow discords and just talk themselves out of a good trade or into a crappy one. Professionals understand that the psychology of a trader plays as the most essential role in their success. Professionals can remove their emotions from their trades because they're not trading with other people's money, not their life savings, not funds that they have to build a future with, not anything that is theirs. This gives them the freedom to trade based on systems and strategies without being clouded by personal biases. In my upcoming series, I'm going to share with you guys the insights on how to think and act like a professional trader. I'm going to give you guys guidance on how to create a profitable system that's going to help you understand why it is so important to focus on long-term profitability over short-term gains. As a professional trader myself for nearly 8 years, I know that what happens tomorrow in the market has nothing to do with my long-term profitability because all I'm focused on is building a solid and sustainable strategy. Risk management is the bread and butter and the key when it comes to trading in the stock market, and I always make sure that if even things don't go the way that I want, my net worth overall will not be destroyed. I am not going to deal with financial insecurity because a couple of trades did not pan out the way that I want. By limiting myself to just 3% of my account per trade, any losses that I take will never exceed an amount that I feel unsafe with, which means that all my money being traded is not necessary for me to live a day-to-day life. I'm not trading with retirement funds. I'm not trading with anything I need to live with. I'm just trading with money that really is there to just build my net worth or fail with. And the way that you can stay confident knowing that your long-term financial stability stays secure is that you don't trade with money that you need. Now, let's talk about the next thing. Position sizing. This is essential when it comes to successful trading. When you analyze your past trades, it's not unusual for a lot of traders to see that they probably win 60, 70, maybe even 80% of the time. But because their average gain typically isn't as high as their average loss, then this can lead them in a downward spiral for their portfolio over time. Paying close attention to your position size will help you to reduce risk and increase the chances for your long-term profitability in your strategy because you're not going to be getting stopped out of every single movement that happens within the market. And also you're not going to have to look at your position every 5 minutes because you're trading with such high position sizing that if the stock market moves 5-6% that day against you, it could destroy your account. I didn't add this to the video, but I should say that you should not be using margin unless you are proven to be a successful trader. And even then, you really shouldn't be using margin because it's not going to follow our risk management guidelines. Now, as we spoke about in the beginning of this video, that your percentage of wins is really not important, even if you're only right 20% of the time, but you use careful risk assessment and risk reward ratio when you're looking at your positions, you will be profitable in the long run. Many traders fail because they try to add these complex strategies or rely on a seamlessly cutting edge software instead of just keeping things simple. Most trading mistakes just come from not having direction rather than an inadequate technical analysis ability. So just sticking with your plan is key. If you look at most of the actual trading bots and strategies that I've set up on our channels, you will notice that they are wrong 80% of the time, and at one point a max drawdown of 45% occurred, which means that your account would be down 45%, but as long as you stuck to it, you would have been more than fine. As we wrap up our discussion, let's just talk about embracing risk, which many people just avoid overall. It can be a huge shock to put money into the market and watch it disappear within seconds, minutes, or even hours. And the problem of this is that we are not taught about the market. Our whole life, we are brought up in a construct inside of a box and told us what to do through school, through jobs, through our parents, through everything. And then we're let out into the financial markets to really do whatever we want. Kind of like, you ever see the Amish people who come out, well, I think they get to get like 1 weekend or 1 month to see what it's like to live amongst other people, and then they get to come back. That's kind of how the market is. You get to go into the market, no strings attached, nothing. You get to do whatever you want with your money. And that's why people lose, because at the end of the day, they don't understand risk and they fall victim to their impulses, because who you are outside of the market is who you would become inside of the market. The biggest thing that helped me after I had blown my account up many years ago was to fully accept the risk. Even though you put money into a position, you're not expecting to lose all of that money if things go sideways. So when I was trying to come back and build my portfolio back up in 2016, I had decided that I was going to test out 5 separate strategies, which are strategies that I still use to this day. And so took $50,000 and divided it into 5 different trading strategies with 5 different accounts, each of those accounts being worth $10,000. I then, over those 2 years, grew them, tested them, fully knowing and accepting the risk that all of this could turn to zero. And in turn, it was the best decision that I've made in my trading career, because now I have 5 systems, which I love. 2 of them I still use each and every single day. And by fully accepting the risk, I was able to trade the system to absolute perfection. And at one point I was down 40-50% on some of those accounts, but I held on, I stayed true, and in believing in the numbers in your strategy, you will be able to execute trades like a pro day in and day out. I hope that this video helped, guys. Hit the like button, subscribe, check out our other channels, and as always, thank you for all the support. Peace.